There you go. That is recording now, isn't it? Yeah, perfect. Perfect. First of all, hi everybody. I'm Tom. I'll be your account manager here at British Friendly. Today, thanks to Mohan, we arranged it early this month, was it not the back end of last year actually, just to run through features about income protection ultimately. So you will learn about British Friendly during this presentation as well, but overall, we're going to be looking at the overall picture of income protection, how it really suits your clients going forward. Okay, so got a very fancy presentation to go through. So I'll quickly share my screen and we can get on with all the exciting things of income protection and what that can do for clients going forward. So ultimately today, looking to discover more with British Friendly than just income protection. Okay. So going for the learning objectives, today we're going to be reviewing some key statistics that actually help support income protection as a solution and may actually look at the risk, the overall picture of risk, and how that can really start those conversations with your clients to make sure they really take on board the importance of income protection. Then we'll look to identify some common client objections. So a couple of years ago, we did a survey and we found from advisors what the most common objections were that clients had, not just to income protection, but as protection as a whole. So we'll go through a few of those common objections and we'll look at a few ways potentially you can refrain your conversation or just things you might think about or haven't thought about, maybe something you might click in there, and therefore might be able to take that into the next conversation as well. Just try and change clients' perspectives and trying to get them on board with protection going forward. Then finally, we'll go through some sales tools which are available from us here at British Friendly, which could really help aid those conversations with your client, really bring home the importance of income protection, and you can look to tailor make it as well, so it's more of a personal conversation for your client going forward as well, between yourself, obviously, and your client. Okay. So first of all, let's start from scratch. I'm sure you're almost, if not all of you, are aware, but first of all, what is income protection? So income protection is ultimately there to support you if your client is off work due to being ill or injured, and therefore they're unable to perform their job role. In that situation, us here then as a provider, we look to pay either a weekly or a monthly benefit to support your client during that difficult time till they're back on their feet and can return back to work. So ultimately, we're there to make sure they don't get in a financially difficult situation just because they might have hurt their back or they might have hurt their knee or they might have something a bit more serious as well going forward. But ultimately, that is there. It's a safety net for clients. If their income would stop for some reason, we're there to support them to get them back to work to actually continue that income as well. Okay. There's no limited times you can claim as well when it comes to income protection. So not like a life policy, obviously, but also not like majority, not all, but majority of critical illness policies as well. You can claim as many times as you like during the lifetime of the policy as well. So once, up to 10 times, as many as needed, ultimately. So just because your client might have been off work 3 times, we're not going to turn around and say, oh, you've been off 3 times, that's the policy used. You can use it as many times you like during the term of the policy, or not as many times you like, but as many times you need to if you are ill or injured, of course. Okay. And you can always make it flexible for your client as well. So I appreciate, as we'll come on to, one of the common objections is it being too expensive for clients ultimately. But there are ways that you can make, you can tailor make the policy to really suit their needs, make sure they get the protection they need whilst working at a budget as well. So we can run through a few scenarios there as well going forward. Okay. In order to obviously get your clients on board with income protection, first we need to look at the risks, don't you? Actually, something that might happen to the client. So in terms of putting things in perspective, let's just look at some stats to actually help sort of explain the current landscape of risk. So in a survey that we did recently, we found that 50% said they'd feel much more financially resilient if they had insurance in place. Yet only 27% of those actually held an income protection policy. So just there, ultimately, there's a real opportunity to make sure we are protecting those clients that probably don't really understand the policy, but they know what they need and they know that they need that protection there. So they feel comfortable that if they are off work due to being ill or injured, that their family are protected, they keep the house, they keep food on the table, for example. So they are there, 50% say they'd like to have it, but only 20% have actually got it. So there's a huge scope there of clients that know they need it, but they haven't either spoke to an advisor or advisor hasn't spoke to them about it, and therefore the opportunities never come up. Because unfortunately, although we'd all love it, you don't wake up on a Sunday morning where having a coffee, do you, and think, I really need income protection. Let's have a look online and try and buy that myself. Some people do, but it is pretty rare, isn't it? The most way that protection, particularly income protection, is sold and provided to clients is during client and advisor conversations. You are key to obviously open their eyes to make sure how important these protection products really are for clients going forward. In Q2 of 2025, so last year, 2.78 million people were economically inactive due to being on long-term sickness leave in the UK. So again, a huge amount of people, millions of people, obviously, 2.7 million. So again, these people are really, if they haven't got income protection, you haven't got good sick pay for your employer, you are going to be struggling financially. And we look at some stats in terms of what clients have in relation to their savings in a few slides' time as well. That actually says one of the stats right there. Look. Around 39% of the UK adults have £1,000 or less in savings, and 16% have no savings at all. Unfortunately, I'm probably guilty of falling into one of those brackets. So it shows that although people might think that it's not going to happen to them, they might not think about how protection can help them. If we really paint the picture, we don't want to scare them, of course. We don't want to scare clients into getting protection. We really want to open their eyes to the fact that if they have only got £1,000 or less in savings, if they are at work, being ill or injured, maybe for a month, 2 months, 3 months, how are they going to survive without getting into financial debt or financial insecurity as well going forward? So really, it is just important, obviously, for anyone working life going forward. Appreciate that we've just come out of the festive period. The festive period is actually one of the most dangerous times for income protection claims, ultimately, particularly if you've got fracture cover built onto the side. But this is just giving you a taste of ultimately the fact that during the year, different events or different different times of year will obviously look to change the landscape of risk going forward. So winter is obviously much more dangerous than summer usually, because when it comes to winter, obviously we're having a lot of rain at the moment, so you don't get too icy. But earlier in January, it was quite icy. It was down here anyway. I mean, I slipped a couple of times going to my car. So these things happen, and it does help that these kind of things that anyone can experience, and it just shows the risk is there going forward. But claims for fracture cover shoot up in December, mainly because clients either fall out of the loft when getting decorations down, either sales as well. So January sales, probably not so much anymore, but probably previously that was a dangerous thing. But these kind of events really show that there is a risk there all throughout the year, ultimately, going forward. So coming to the common objections, I'm sure most of, if not all of you, have seen at least one of these objections once from a client in relation to not just income protection, but protection as a whole. So the main objections that we found is it is too expensive. That's the number one common objection that we heard from advisors when we did this. Number two was other. I'm not really too sure what that was, to be honest with you. But another one was I'll rely on my savings. I doubt insurers will ever pay out, or I will consider it later. My pet hate, and I'm sure your pet hate as well, that I will consider it later. The worst thing that clients can do, ultimately. So they're the main objections that we heard. If you have any others, feel free to throw them in the chat box that you might have had. I can certainly speak to the marketing team and see if there's any way we can combat those kind of scenarios, kind of questions. But they're the main questions that we got told when we did the recent survey, ultimately, of the survey a couple of years ago. So how do we address those? How do we speak to those? How do we overcome those objections? So it's too expensive. How to address loss evasion, ultimately. So your client may perceive the cost of income protection as an expense rather than an investment into financial security. So they just see 40, 30, 25 pounds, whatever it could be, every month going out, not seeing any value into it. They really need to see, paint the picture and see the value that if they are off work, obviously that's when it kicks in, and that is really when it will support you and your family. It's like car insurance, obviously. You don't ever want to, I know you probably say all this time to your clients, you don't ever want to be using it, but you have to pay. Obviously, that's slightly different because that is, you have to do it by law. Same concept if it wasn't by law. You don't really want to be claiming on it, but you have got that safety net that if the worst happens, you have got that to fall back on ultimately. That's exactly the same as it is when it comes to income protection. So ultimately, if that is one of the common objections that you get, first of all, do not focus on the cost of the policy. Just focus on what it will actually do if your client is in that situation where they really are desperate to need it. Ultimately, the fact that it supports your family's financially helps put even just petrol in the car to drop your children off at school, for example. They all cost money. That's something that if you haven't got, you're not working, you haven't got an income coming in, you are going to struggle to do those simple things in life as well. Where income protection can bridge that gap ultimately, and that is the other safety net that it provides. There is also affordability. So as I mentioned at the start, there's so many flexible ways that you can tailor make an income protection policy to really suit your clients' needs. So whether or not they, so here at British Friendly, for example, we have a full-term policy, a limited 5-year policy, which is quite unique and a few of us in the market, a limited 2-year claim policy, and a limited 1 year as well. So I'm sure a lot of you do this already, but I find a lot of advisors ultimately use that as a bit of a sales tactic or advice tactic. And the fact they'll always start off the full-term policy, because that's a Rolls Royce, isn't it? Best protection for your client. If that is too expensive, they are working within a budget. You can always look towards the 5-year, the 2-year, or maybe even the 1 year. So I'm sure we can all agree that some protection in place is better than no protection in place at all. So there are ways to benefit the client, obviously make sure they do get the protection that ultimately they do need. You've got an example there. For example, a 35-year-old non-smoker earning 35 grand a year as an office administrator, taking out cover to 65 with a 1-year claim period and 26-week deferred. They're looking at less than £11 per month as well. So it's very affordable, and that still gives them some protection, at least if they can afford their mortgage, keep food on the table, the essentials of life ultimately, just to make sure they have got that comfort. Also, emphasize on the extra value that's provided through not just our benefit, but everyone's everyone's policies ultimately. Most people in the market do have something similar to what we have here. Not all, obviously, but regardless of who you ask, any provider, the most used thing in the applications is always cheaper demand consultations. Here your client gets unlimited consultations. So this is the application, the simple application that your client gets when you have a policy with us. It's the app you can download on your phone, and your client can get cheaper on-demand consultations, 6 physiotherapy sessions, 6 mental health support sessions, 2 second medical opinions, and a discounted annual health check as well. That health check, client does a finger prick of blood, send it back to the lab, and it checks for 20 vital signs in your client's body, things like their kidney health, their liver health, their diabetes risk, their gout risk, their cholesterol, all these things, just to make sure your client isn't sleepwalking into condition. So really highlight these things as well. You've got our BF Care, which has got an element of death benefit in there as well. Last year, we paid over £85,000 in death benefit claims as well. So it shows that these added value benefits the client gets access to with us here at British Friendly really go down well. They are used, and it's another thing that really highlights the importance of income protection, but also the expense part. So if your client ever says it's too expensive, don't just focus on that. Show what you can use throughout the whole year, but not just your client's family members can also use these things as well. The GP demand consultation is, to be honest, really quick, really efficient. I used it last year, and a bit of sinusitis going on. Called my GP surgery, and it was 2 weeks until I could get a first internal appointment. Remember to have this application, booked an appointment with a GP for 1 hour later that day. Spoke to the GP, ran through my symptoms, said, yeah, sounds like you've got sinusitis. Would you like some of my antibiotics? I said, yes, please, Mr. Doctor. Then emailed me the prescription through. I then went straight down to my pharmacy and had the prescription in my hand, or the antibiotics in my hand, within 3 hours making that phone call to my surgery, where I thought I was going to have to wait 2 weeks. So really quick, really efficient. And as I said, your client's family members, husbands, wives, children can also use that application as well. Okay, so really highlight the added value benefits as well, if you ever get that. And just to mention it, because you got to mention it, we did win the Cover Excellence Awards last year, 2025. Outstanding added value. So there you go, with the extra benefits your client gets with Health Australia British Friendly. Got a shout about that, haven't you, if you win an award. So another one we found, another common objection was, I've already got cover. So client might think, like, they might have already discussed this with an advisor previously. An advisor might have already placed cover for that client, and therefore they think they're sorted, they think they're great, they think they're protected. They may well be, but just because they say I've already got cover doesn't necessarily mean they will be. They might just have life cover. They might just have critical illness cover. They may not even have any cover at all. A lot of clients probably don't understand full protection, let's be honest. So they might not have any protection at all. So always make sure, and really say, like, okay, I still think that I should really review it, make sure it is protected, make sure you do have the protection. Your circumstances may well have changed. Let me just review those things and see if we can get them. Income protection is the safety net that most clients are likely to fall back on during their working life. So, you might have life cover, you might have critical illness, but income protection during your working life is much more likely to claim on than you would a life policy, for example, or a critical illness policy. Being exposed to an illness and injury preventing you from earning a living is much more likely to happen than actually passing away during your working life, which there affects that and makes sure that income protection does tend to be the one that's mostly claimed on. Critical illness as well. It is a great policy. You know, ideally, we want clients to have all protection products, don't we? That would be the best scenario for everybody involved. You know, they're protected all round. Critical illness, great policy. If you ask any income protection provider what their most claims are for, the vast majority of things will not be covered under a critical illness policy. So, for example, the majority of providers usually musculoskeletal conditions are the main thing to claim for. For us, it was 54%, not something that critical illness pay out for. If you've got a bad back, you could be off work for months, maybe even years if you've got a serious bad back, where critical illness won't pay out for that. How would your client support themselves and their family? They don't have that income protection to support them during that time as well. That is where IP comes in, ultimately. Heart attacks, cancers, unfortunately, these things do happen, and those are things you can claim for income protection. Again, I don't want to bash critical illness here. You can get critical illness and it might not pay out because a heart attack might not be severe enough. The cancer might have been a grade 2, grade 1, for example. If that's meaning you can't work for some reason because you're stressed, you can't work because of that condition, it's making you you signed up by a GP because you can't do that. That is something you can put a claim in for in income protection. Okay. Insurers don't pay out. So obviously, this is a common theme probably for the last 40, 50 years, maybe. I mean, I think it is getting better, thankfully, the perception of insurers. But we all know that, unfortunately, insurance as a whole hasn't had a great rep for, well, probably forever, really. But I think it is improving slightly. But insurers don't pay out is the addressing of the fear of uncertainty, ultimately. I'm paying these premiums the whole time. If I really need this policy, is that going to pay out and help me support me and my family during that difficult time that I'm going through? One thing I'd urge you to do is look at every single income protection provider's claim stats, really highlight them, bring them to life, ultimately, and highlight them to your clients going forward as well. As an example, in 2024, we haven't yet got 2025 full claim stats, as that comes out usually around March time. So we're looking at 2024, but I believe they're relatively similar from what I'm hearing. So around just under 20,000 new claims were accepted in 2024. This is for obviously the whole market. Just under 700 million was total cash payments was paid when it comes to claims, and 5.1 total amount claims paid by us here at British Friendly in 2024. Over the last 20 years, we have got a claim paid of 94% as well. So use these stats, show that the clients actually that their perception is incorrect, and the vast majority of claims do get accepted and do get paid. The only reason really that the main reasons, as we all know, are non-disclosure. So really highlight the importance of really disclosing everything that's relevant to the application from your clients to make sure there's no misrep concerns when it comes to claim stage. That's one of the key things that you as advisors can do, is really home in, obviously, that importance, which I'm sure you do anyway. And there are going to be times when clients might not miss something out. If they do, then it's an innocent one. Obviously, that'll be looked at slightly differently than a full misrep. But something that really hone into your client that is really important, and one thing they can really do to make sure when a claim comes, it's nice, smooth, nice and easy. And that, again, should hopefully address some of the fear and uncertainty if they're really truthful in the application going forward. Use testimonials as well. So I won't show you this today, but it is available on our website, and a lot of our providers have testimonials as well from specific cases. Ours are real life clients with us here at British Friendly, real stories. They are powerful, and obviously, again, they bring it home to life. Use those when you talk to your clients about the importance of protection going forward as well. Okay, I like to use anyone's when it comes to it. I can't remember who was it. I think Science Setter have actually got a really good story as well about I can't remember who it was now, but it's a really good story. But yeah, use everybody's really when it comes to highlighting the importance of income protection or protection as a whole. Use these stories. So I've touched on previously a few of the stats about relying on savings and being a bit overconfident on your savings and it protecting you if you are off work due to being ill or injured. So your client may actually overestimate their ability to rely on their savings and other sources of income. First of all, if the very first thought for a lot of people in their 20s, for example, if they are struggling financially, will go to the bank of mum and dad. Unfortunately, bank of mum and dad will be, unless you're very fortunate, It's going to be very unlikely to support you and your lifestyle probably for a good 3, 4, 5 months if you are off ill, being injured, off work, being ill or injured. And that kind of highlights it when it comes to these stats here. 39% of UK adults have less than £1,000 in savings. 16% have no savings at all. That's roughly 8.7 million people that have no savings at all. So if they are off work for even a month, they'll be struggling. 65% believe, so they know ultimately they wouldn't cope for 3 months without borrowing. And 21% save into pensions or investments that are great, but it's not readily available. That's for future you, ultimately, isn't it? So importantly, income protection. So first of all, obviously these things here, you can show that clients don't particularly have much saved up. And even if they do have savings, let's say they've worked their whole life and they've got 10, 15, 20 grand saved up. They get to around 50 years old, 55 years old, they're looking into the future, looking to the retirement age, and then they get ill, they get injured, and they're off work for a year, maybe 2 years. Then they haven't got income protection. How are they going to support themselves? They're probably going to start dipping into those savings, and therefore dipping into those savings just to support your families, put your mortgage, put food on the table. Those savings are slowly dwindling down, which therefore makes, if you ever do get back to work, your retirement is probably going to increase there as well. Not a great scenario for everybody involved, ultimately. Where income protection is there to save that scenario from happening as well. It is there to keep your clients' savings safe, ultimately. So your clients got that savings of 20 grand. Great, you got that 20 grand. They go off work at 55 again, for example. Maybe for a couple of years, they've had their back, they're a manual worker. They haven't got to touch that 20 grand savings. They can have income protection to fall back on or pay that monthly benefit. So they're then supported and secure until they get back to work or reach the retirement age of the policy. Once they're a teacher around the age of the policy, they will see that policy will stop. But at least they have saved that £20,000 of work so hard for it, as an example. Okay. Another one, which is similar to overconfidence bias on about your savings, is that the government will help me. I still think that a lot of this tells from, I know it was like it was pretty much 6 years ago now, but COVID and furlough and all that kind of stuff, people believed that they could rely on the government. But then you probably could for certain occupations, but that stopped, obviously, didn't it? But some people still think that if they are off work being ill or injured, the government will step in and will help them still go forward, just as they supported them during that time. Not the case, as I'm sure you know, and it won't happen, unfortunately. But the majority of clients, well, not majority, but a lot of clients still think that that would be the case. This is the reality, ultimately. So it is pretty limited, the government support. So make sure you really focus on that when you talk to clients, if you ever get someone saying that to you. But this is the average weekly household spend in the UK. So just under £570 a week. The client hasn't got income protection. They're off work. They may be entitled to statutory sick pay and universal credit. That's totals a weekly benefit of just under £220 a week. Quite a shortfall from £570 to £220. And a potential state support for 2 couples there as well. So you can see a slight increase, but it's still nowhere near the actual weekly average spend of a UK household. So again, if the client hasn't got this any protection, that's what they're going to have to fall back on. That's what they need to support themselves and their family going forward, which I think most of us can agree, particularly with the cost of living. That probably won't even get a week shopping for a family of 4, unfortunately, these days. So it really won't help them go forward. It will help a slightly bit, but it won't help as much as if your client has that income protection to support them and actually bridge that gap, and therefore they can continue their lifestyle, continue obviously paying mortgages, and continue getting food on the table as well. So income protection really does bridge that gap when it comes to being off work and make sure you're not missing out on what you want to do ultimately. To go on to the final most common objection that we found is I'll consider it later, which is, as I said at the start, my biggest gripe and probably one of your biggest gripes, I imagine, for a lot of your advisors. Consider it later, how to address procrastination bias ultimately. So your client may delay the decision about income protection because they think they can address it later, or they think they're too young. First of all, again, I'm sure you're aware, but you are never too young to get protection. Well, you are, obviously, if you've got to be working age, you're over 18. Once you're 18, you're never too young to get protection. Our youngest claimant in 2024 was actually just 20 years old. So yeah, just because you're 20, you can still get ill, you still can get injured. You might think you're invincible in your 20s, and it's a few years off of me now, but I remember being a bit stupid, getting drunk, jumping off walls, that kind of stuff. You know, you can get injured that way. So just because you're not mean you're not going to get injured, does not mean you're not going to get ill. You still could, and you could still be off work due to a long time as well. And therefore, income protection would support you during that time. Emphasize the benefits of early adoption. This is the key area. When you are talking to that client, regardless of what age you are, the point that you are talking to that client, it's very unlikely they're going to be in a healthier, fitter state than that time they are talking to you at that point. And therefore, getting income protection or getting some protection insurance in place is key at that point. You're going to get the best possible terms. You're going to get the best premium for your client. You're going to get less exclusions for the client as well. Obviously, a client in their 20s, you're going to get a much cheaper premium. You get a level premium that can stay the same premium for the whole term of the policy, the whole life. Index link it, RPI, that client is going to be protected ultimately for the rest of their working life going forward, and are locked in at that cheap premium. So really emphasize the benefits of early adoption. Those two things I think are crucial. Cheaper premium and the healthiest you're probably going to be at that time when you want to talk about protection. So really important. Discuss the risk of not taking out the policy. So again, on our advisor toolkit, there's loads of sales aids which really home into the idea about the risk of not taking out the policy. And in fact, even if you are 22, for example, speak to an advisor, say, I don't want to take it out yet, come back to me in a year's time. In that year's time, you might have some sort of condition, you might have an illness, you might have an injury. Number one, it might mean you might never be able to get protection at all, depending on what the injury or the illness was, or like in that scenario. But at the very least, it's likely it'll come with some sort of an exclusion or some sort of loading applied because of that time they took to actually do that. And it could have had it covered if they spoke to you and actually had that protection in place a year earlier. So it's procrastination bias when it comes to single protection or protection as a whole is one of the probably most annoying things ultimately. But, there you go. So the very first thing, so obviously we can sort of make sure they understand the risk of it, but then we need to actually understand what they are buying as well. So you need to really understand what income protection is. So again, there are some really useful sales tools on our website, which really explains to clients what income protection is. You've got what income protection leaflet, which again I can get sent out to you, but it basically outlines what income protection is in simple terms as well. So we're not trying to use jargon, of course, trying to make it simple so anyone can read it, anyone can understand the policy as well. Loads of case studies, and like I mentioned, that really home in the idea of income protection, how it supports people, helps people. Our claim stats are there. So also, like I mentioned, for clients that say their insurers don't pay out, have a look at our claim stats. Like I said, over the last 20 years, 94% of claims have been paid. So make sure that you really home into that. To make your life easier as well, protection suitability wording. So if you hopefully going forward when you do use us, suitability wording will be on our website as well, so you make it nice and easy to actually get your suitability letters, which can be quite fun for you guys sometimes. And there's a misrepresentation guide as well, which can be really useful, not just from your point of view, but just discussing it to clients as well. So as I mentioned, this can help with the uncertainty of insurers not paying out that a client might have a perception of. If you speak to a client and go through this guide with the client, really explain the how to be honest in the application and how misrepresentation could affect things further down the line. So make sure they are honest, but you can go through that with your client and sort of really make them think about the importance of actually being truthful on the application as well. There's also some other things like our safety net calculator, which can sort of make a bit more of a personalised conversation. Yes, not just our other providers in the market do have something similar. So whichever one you use ultimately just try and use one. They are useful when it comes to discussing with clients. From the feedback I get, mainly because you actually go through it with them. You talk about what their mortgages, you talk about their rents, like a mini kind of fact find when it comes to their expenses anyway. Talk about their broadband, their clothing, their hobbies, what they actually do. It could be a rapport building exercise as well, obviously, for clients go with certain advisors to make sure that you can speak to that client. Really tailor make it, personalize the conversation. Again, gets that rapport, gets that trust with client and advisor as well going forward. And then they can really, once you have that trust, then I'm sure you know, you can then go into the importance of income protection or protection as a whole and the risk as well, and make a really, obviously, not eat into the idea. Really focus on it, ultimately, how important income protection is. I missed what I'm trying to say there, the actual wording, but I hope you understand what I mean. So ultimately, why would you choose someone like us here at British Friendly? So when it comes to income protection, here at British Friendly, we are a specialist in income protection. We don't do life cover. We don't do full-scale critical illness. It's purely income protection that we do. Personally, I think that's a really good thing. It means we really focus on the IP market, make sure it's comprehensive, make sure it's suitable for majority clients, and comprehensive across the board ultimately. So we are a specialist when it comes to IP. We have the option for both age-costed guarantee premiums and level guarantee premiums. Currently, feedback I'm getting, applications that are coming in, we are quoting extremely strong for level guarantee premiums. So hopefully you'll see that when you are quoting going forward as well, and see us ultimately cropping up there, particularly in the top 3 going forward. Range of deferred periods and claim benefits. So as mentioned, you can have a benefit, you can have a claim deferment, so a waiting period from anywhere between day 1 and 52 weeks on our age costed premium, and 4 weeks and 52 weeks on our level guarantee premium. Claim benefits with the full term, the 5-year, the 2-year, and the 1-year, like I mentioned. We can also look to help clients that have type 2 diabetes in our income protection. So type 1 tends to be a decline, but type 2 is something we can help with. There are a few caveats in the fact that your client needs to be over the age of 35, not be a smoker, not be injury independent, not have had any complications, have a HbA1c reading of less than 8.5 or 69 mmol, for every your client uses, and have a decent BMI as well. And tick all those boxes, they can have income protection with us, and if they are off work due to a diabetes type 2 issue, they can put a claim in for that as well, because they won't be excluded of diabetes type 2, they are likely to be loaded, anywhere between 50% and a maximum of 150%. But the fact they can put a claim in for that condition, tends to go really well. So again, anytime we've got kind of type 2 diabetes, always worth a conversation with us here at British Friendly. We are very flexible in our indexation. So as you'd expect, you can include indexation. If your client doesn't want it, they can defer it up to 3 times in the length of the policy before it's removed. But something we also do that I'm not aware of any other provider in the market doing to this level of flexibility is that at policy anniversary, the client can actually choose what percentage increase your client wishes to go up by, up to the maximum of RPI that year. So say, for example, indexation RPI goes up by 10%, but your client's salary only goes up by 2% or 3%. At renewal, they can turn around to us and say, actually, I want to go by 1%, 2%, 3, 4, 5%, whatever it is, up to the maximum of RPI that year. All on their renewal documents. We're going to try and hide that. That is an option for them to make sure that they don't get overinsured suddenly, or that they don't get a 10% increase in their premiums, which could make it unaffordable from going forward as well. It's good flexibility there in indexation. For certain occupations within the NHS, such as dentists, doctors, midwives, nurses, and surgeons, but also teachers, if their sick pay follows the Burgundy Book, all you need to do for those occupations is literally quote and apply for a 52-week deferment. You quote and apply for a 52-week deferment for those occupations with the NHS or a teacher, and then what that means is ultimately we'll match it, we'll dovetail it to whatever sick pay is they are at that time of claim. Because of the way their sick pay works, it increases every year in line with their service. It used to be quite difficult to insure correctly. Now, 52-week deferment, job done for your point of view ultimately. Of course, if any of you watching this or here now have a client that is from the NHS, feel free to give me a call, drop me an email. We can discuss it a bit further. I can really run through it just so you're confident and comfortable talking to your client about how that specific part of the policy works. Okay. If the client gets a fallback or mental health exclusion, we'll provide a 10% discount on the client's premiums. Premium holiday option is also included in the policy, quite generous, more unknown in the market, in the fact that quite a few providers need your client to have the policy for 2, 3, in some cases 4 years before they can look to the premium holiday. Here at British Friendly, once clients have the policy for 1 year, they're then entitled to use a premium holiday. They can then pause the premiums for up to 6 months at a time, 2 years on length of policy, but 6 months at a time. Then we'll not collect any premiums during that time whatsoever. Okay, can't claim during that time, but still really good. They come to you and say, look, I'm struggling financially, in between job roles, I want to go traveling for a few months. You can recommend they do a premium holiday rather than actually cancel the policy outright. Okay. Guaranteed insurability option, sometimes referred to as GIO, again is included as standard policy, and you can look to increase your client's benefit by 50%. This is when the client's policy is already in risk, already in force, but then your client has a life-changing event. to get married, to buy a house, have a child, they adopt a child, take up new mortgage, new rental accommodation, all these things we can look to increase the client's benefit. A little bit of a Brucey bonus as well, that if you do use us here at British Friendly, if your client comes through you to action a GIO, you'll also get additional commission for that as well, which I know for a fact not every provider in the market provides. So a little bit of Brucey bonus. We've also got an occupation promise in our policy. So obviously that means, for example, let's say your client's an office worker and they take a policy out with us as an office worker, then get that covered and the policy goes live under that occupation. Then 2 years later, 3 years later, decide actually I want to become a police officer. Police officer is not something we would cover from the outset of the policy. We would decline the occupation. Because the client's already got a policy with us as an office worker, but then they move to another occupation, we will cover that still. So we have an occupation promise, meaning no matter what client occupation that they move to, we will cover them on the same policy going forward in the same terms as well. Okay, so there's always worth remembering that. And you've also got the waiver of premium, which also is included as standard, which thankfully is pretty common these days. Premiums then waived after client's waiting period, so the client's got a 4-week waiting period as an example, call it a month, pay a premium for that 1 month, then they're being claimed, they're not used to pay a premium if they're back out of claim. Okay. When it comes to underwriting, we do 2 areas we are really strong when it comes to underwriting is BMI. For BMI, for example, if you've got a client above the age of 50, we've got to BMI 35.9 with no lowering applied at all. We also got to max in BMI of around 42.9 for that age bracket. That is individual consideration. It tends to be clients at the higher end of that bracket, but it's still worth a conversation with us here at British Friendly and see if we can look to help that particular client. Okay. Another area, we have no maximum mileage under income protection. So some providers in the market, if a client does over 25,000 business miles, they actually load the premium slightly because the risk involved. Not something we do here at British Friendly. So anytime we've got a client that might do over 25,000 business miles, as an example, always have a conversation with us here at British Friendly as well. Okay. When it comes to occupations, we can look to help clients. So we're one of the few, well, we are one of the only 2 providers in the market that will look to cover airline pilots, as an example. We can help with farm labourers, heavy machinery workers, firefighters, something we can help with. Certain occupations that work offshore, so oil rigs and cruise ships and super yachts and seafarers, really strong for them, the allowance they get. When it comes to working at heights, for tree surgeons, no working height restrictions at all. That always fine tree surgeons. For other occupations that may work at heights, such as scaffolders or roofers, if they work above 40 foot, then it may cause complications. If they do work above 40 foot, the key question to ask them is just how often do you work above 40 foot? If it works out to be 5 hours a week or less on average, that's a magic number. 5 hours a week or less, absolutely fine. We can take them on, no problem at all. Okay. Final part, I'm just going to go through the optional extras that your client can add on to their income protection here at British Friendly. So our most recent optional extra is children's critical illness cover, which can now be added to clients' income protection policy. Has gone down extremely well as well in the market, not just saying it, but obviously run through the reasons why. Your client will choose a benefit between £1,000 and £25,000 worth of cover. Currently, as it says there, for £25,000 worth of cover, additional premium is coming out at £3.50 a month. Now, £3.50 a month will cover every single one of your client's children as well. So you've got 1 child, £3.50. For 8 children, £3.50, and all children will be covered for that amount as well. Okay. Can be added at during pregnancy, within 6 months of birth, adoption, become a legal guardian. We have got a leaflet on there which shows all of the conditions that are covered on there. It's like 58 full conditions and then 20 additional conditions as well. If your client gets an additional payment, we'll pay 50% of the selected benefit. The full payment will still be waiting there if your client's unlucky enough to then get a full payment condition as well. Once the child has received a full payment condition, they're no longer covered under the policy. Okay. Fracture cover can also be added on. So that's one we had a couple of years ago. We added on. It's now available for an additional £4 a month. That's a guaranteed £4 as well. So it won't increase. We see £4 for the whole term of the policy. The client can do 1 claim per policy a year, up to maximum £6,000. It covers 18% bone fractures and can move to any time and claim it alone or alongside your client's income protection policy. When it comes to fracture cover, when it comes to exclusions, some hobbies are excluded, such as rugby, mountaineering, martial arts, cage fighting, boxing, cliff jumping is as well. But I don't really know why you don't want to do that, but that is an exclusion. But the two main ones that are covered on our fracture cover, I'd like to point out: football is covered. So amateur football, client playing it a weekend, right, breaking a bone, breaking a foot, they can put a claim in for that as well. And also road cycling is covered as well. So if we get a client saying to you, I ride to the office, my site of work, wherever it could be, again, always try to work bolt and a bit of fracture cover, get knocked off their bike, fall off the bike, break a bone, they can put a claim for that as well with us here at British Friendly. Okay. So we went through, obviously, the landscape of risk. We went through some objections and how to hopefully reframe the conversation to actually make them into a positive thing and really make the clients really understand the importance of taking income protection out at that time. And we went through a few sales tools and a few things that we should hopefully support that conversation as well. So these are some useful contact details ultimately. So you've got, this is our main contact number. This is our support number. So if you're not set up with us yet, then all you need to do is actually email that address, just with your full name, email address, and best contact number with your FCA number. We can get you set up, no problem at all. Anything application-wise, that's the best number to, that's the best email address, or that is the number there, okay? So ultimately, are there any questions at all? Any questions when it comes to income protection or British Friendly? These are your account managers. So I'm mainly south. Anything south of Birmingham is ultimately you'd be referred to me. Anything in the Midlands area would be Adam, and then anything north ultimately would be Olivia Robinson as well ultimately. So I'll leave that page on there just for a couple more seconds, just so you can jot that down, take a quick picture, just so you can reach out to your BDM here as well ultimately. Okay. There we go. But ultimately, any questions at all? Anything you want to go through a bit more detail? Anything at all when it comes to income protection and British Friendly? Hopefully that was useful, but any questions at all?
I think there's some in the chat, Thomas.
Oh, is there? Sorry, yeah, that's all up. Okay, so please explain how the payment holiday option would work for a lady that is on maternity pay that reduces over 9 months and they might not return to work for 1 year.
Yeah, that was my question, Tom. Yeah, I come across that quite often. So NHS has got the best maternity pay because you get full pay for about 3 months and then it tapers off over 9. So they're getting less and less and less. And yes, they would take a payment holiday because what would get paid, and most is now legal that any lady has got the legal right to have 1 whole year off of their work whilst they have a child. So this is where income protection just does not support these people at all. And your policy will only allow 6 months. So quite frankly, it's not fit for purpose. Fine to sell it to men, but you can't sell this to a 25-year-old lady that might have a baby later on, because they can only get 1 6-month holiday.
Well, no, they could do 6 months, 2 years. They could do 6 months at a time, and then 2 years. They would be able to do 6 months
and then
pay
another
1 more
6 months.
premium. Yeah, they can do 6 months. Then they would need to go back into auction, for 1 month. So they would need to pay 1 premium, and then they can have another 6 months straight after that. They can do it that way, but I appreciate it's not ideal.
No,
I do appreciate it's not
but
ideal.
If you could look into that or feed it to your product development team.
Yeah.
Okay, so they pay the premium for 1 month, but they're not working. So my understanding is to have income protection, you've got to have earned income.
Yeah, so when I know that when it comes to if a client is on maternity, then the income protection policy would only kick in on the date they were due to go back to work if they were off work, if they were ill. You're aware of that part, but I get what you mean.
No,
in terms of the actual pausing of the policy, it's something industry wise you probably need to look at. I think
it's something that certainly British Friendly need to address and publicise what their procedures are and how they would work, and look to maybe making the policy fit for the 21st century.
Because is there anyone else that does anything at all, Gary, you're aware of when it comes to it?
I know
I think it's industry
for
wise.
example, on their income protection policy, you can have a career break, they call it, for 12 months.
How long do you need to have the policy for? I think that's the difference, isn't it? You need to have
No,
like
I
2, 3
think
years.
the policy can have been run in a very short time.
Okay.
So,
Okay.
but I've had one. She had a policy literally probably 18 months, and has now had she's had a claim because she had a hysterectomy, and she's now on a career break because she was made redundant as well at the same time. So, and they've suspended the cover until she starts back at work. But
Yeah.
the key bit is that people have got to have earned income to have this type of protection. And maternity pay, do you classify that as earned income? SMP doesn't even barely cover you for 9 months from the government.
You can take policies out with us if you're on maternity. Again,
Yeah.
but it would take going forward. So I get what you mean by that point. The fact that, and you're Michael, you're right, saying maternity isn't an illness. I think it's more about the pausing of the policy, really. When in maternity, you can't claim for that, but obviously the pausing of the policy when it comes to it. So yeah, I take your point, Gary. I do.
There's maybe something to feed back to the powers to be.
I certainly can.
You know, no insurer really has true flexible cover for ladies that have pregnancy, and when they've had their first, they may have 2, 3, or 4. You know, I've got one that's got the 5th in the pipeline.
Yeah.
So you know, and how many career breaks do you have? And so it's making policies a lot more flexible to meet the 21st century. And this is the one area that all income protection providers, you know, fall out of bed on.
I can certainly raise it.
And at what point do they calculate the income? Is it on the last full monthly pay slip? Do they pay? Because when they're on reduced maternity pay, if they then had an illness, they were diagnosed, say, with cancer or something, so they're not going to return back to work. What are they going to claim on? So it's a very, very grey area. And it doesn't make it easy for us advisors to accurately advise clients on the what if.
Yeah, I can certainly find out from our claims team in relation to maternity, send it over to Mohan, and get that through if you like. And spread it out to the team. No problem. Mike, you've asked, I can't see you coming up on the exchange. How do we get a quote then compared to satisfy compliance? Interesting. Do you know if you're registered with us at all, Michael? Yeah. We should be quoting on the portals. We should be all on there.
Sorry, Tom. Yeah, I am. Well, I was registered with you, and I've done some cases with you, but when I was listening to you, thinking this is such a good policy, why isn't it showing up on the exchange? So I just ran some quotes while you were talking, and you didn't come up, and you didn't come up as what's the word they use? Just bear with me. Unsuccessful quotes. So you got the comparisons, and then you got unsuccessful quotes, and you weren't there. So I was wondering, should you be there?
Yeah.
Oh, right. Okay.
Definitely should be there. Definitely should be there. Yeah, you're registered with us as well, aren't you? Okay. Harrison mortgages, got indemnity, non-indemnity. That's fine. Maybe, Michael. Maybe that's one that we could take offline if possible. Maybe I can have a quick chat with you.
Yeah, that's fine. Yeah.
And try and work out why it's not coming on. If anyone else has that problem as well, come speak to me. We should be quoting on there, so we can have a look into that, Michael.
I think the issue I have as an advisor, because I'm a great believer in income protection, is you put in the details into the exchange, and a whole raft of providers come up. Yeah. But trying to actually compare like for like, because it's like going to the supermarket and saying, right, I want an apple today, and there's so many options of apples that you don't actually know which is the best one to buy, and there's so many different add-ons now that to get it through compliance, you've got to be a whiz to understand each policy and then document that to make sure it's the best advice for the client. Yeah, so Mohan, perhaps you could comment on that.
And from my point of view, from Mohan, can
well, from a compliance point of view, because you're the provider, so you're just giving us the product.
Yeah.
I need to know how to satisfy compliance when I'm recommending British Friendly, because the health check side of it looks very good, and it's a good selling point.
Yeah, it is.
I have a further question for you, Tom. You allow indexation on your policy because that's the only way income protection should be bought. And I agree with Michael, it's so complex getting these through compliance. But how many times is a client allowed to decline the policy going up?
So they can decline it. They can decline it 3 times before it's removed from the policy.
Is that all?
So yeah, they can move it 3 times. But what we do, which I don't think any other provider in the market does, this level of flexibility, is that at the policy anniversary, the client can choose what percentage increase they wish to go up by. So let's say, for example, indexation goes up by 10%. The client's salary only goes up by 2% or 3%. At renewal, they can turn around to us at British Friendly and say, actually, I want to go by 1%, 2%, 3%, 4%, whatever they wish to go up by, up to the maximum of RPI that year. And they can do that as many times as they like. So they can just turn around to us and say, actually, I want to go by 1% every year. Then that'll be fine.
Right, because the most flexible I've come across in the market is Aviva, which will allow a person just to decline it year after year after year, but they will always offer it. And the benefit is always indexed, and it's linked to RPI, but not everybody has a pay rise. And the biggest group that is excluded from income protection is self-employed, because their income bounces about like a yo-yo from year to year. They never earn the same money twice.
Yeah, so we get a lot of self-employed.
Yeah,
a lot of self-employed. But we could take an average of the last couple of years. We can always do that. But we're quite generous. We're not generous, but we're understanding when it comes to self-employed that their income can bounce around and can go up and down. So we will look back usually a couple of years, but we'd only ever go back to support the client. So let's say, for example, they're self-employed and they had a really good year last year and a terrible year this year in terms of their income. We would then go back to the following year and look at that information, that income, and to assess it on that rather than that year's income. But we'd only ever go back if it was in the positive nature for the client. So we wouldn't ever do it to do negatively affect the client, only ever positive.
No, that's fair enough, because they're the one group that is so hard to sell income protection to.
They're the ones that need it.
Yeah, and they need it the most because they've got no safety net at all. And in fact, if you're self-employed, you're not even legally entitled to claim statutory sick pay.
Yeah, you might be able to get some sort of universal credit. I think the book's that big to fill out or something, isn't it?
That would be a push or a PIP payment depending on what your illness is.
Yeah.
But you're entitled to nothing. So self-employed have got no safety net at all. And it should be 100% of people that are self-employed that are buying this type of cover, but they're not.
Yeah, I agree.
Yeah.
Agree.
But no, that's helpful. Thanks.
Good.
Tom, for a company director, will you allow the basic salary plus dividends as their income?
Yeah, absolutely. Yeah. So we take salary and dividends. We can also take into consideration the spouse's dividends as well, if they're on there for tax purposes only, really.
So when it comes to a claim, how would you assess the provable income? Will you average that over a period, or?
No, so for that, we'd look back, just look back 3 months of salary and dividends being pulled out of the company. Company director. Yeah.
Nice. Okay, thanks.
Okay. Any other questions at all? Apart from the ones that I'll come back to.
No, that's great.
No, perfect.
Great, thanks, Tom. That's fantastic. Thank you. Tom, have you sent us the slides, or can you send the slides to us?
I can resend them. I sent them to yourself and I think, is it Heidi?
Okay, that's fine. Yeah, if you already sent them, that's fine. Yeah, no worries.
Okay, cool. Well, yeah, I did do. But I can certainly send a follow. So what I can send to you, man, is a follow-up email, if you like, with my contact details, breakdown of the key USPs, and some useful documents attached as well, like the BMI guide, the non-medical limits, for example, the policy documents. If I send that to you, will you able to filter it out to the rest of the advisor team?
Okay, that'd be great.
Yeah,
Yeah,
good.
fantastic.
Yeah,
Excellent.
Ideal.
Thank you very much. It's
no problem. Thanks for obviously arranging it. Like I said, hopefully it was useful. Any questions, any queries, feel free to reach out to myself or any other BDM here. And yeah, hopefully we get to speak to you all a bit more going forward.
great.
Cheers, Tom.
Thanks, Tom.
Thank you.
Cheers. Cheers. Bye-bye.
Thank you.